Hello again, everyone. This is Joe Henches with Beyond the Chart, your source for exceptional video analysis of stocks, ETFs, and indices so you can become a better trader. Welcome back. This is the weekend edition. Today is Saturday, July 18th. We're going to take a look at the market the way we usually do on the weekend, which is last 2 days of trading and then on a weekly basis for the indices, indicators, our key ETFs, 5 stocks in focus today: MU, NXPI, SanDisk, FireEye, and CyberArk. Okay, we're going to start off here with the Dow Industrials. The Dow was down 33 3/4 points on Friday after being up. We had a pause day on Wednesday, up on Thursday a little bit. It's interesting. Again, I've talked about compression. I talked about compression in Wednesday night's video. And see if I can find my notes here. Wednesday, the Dow had a trading range of 80 points in here for the day. Okay. Thursday had a trading range of 66 points. So we're getting even tighter. It was tighter than the bar at the peak here, this last interim top on June 23rd. You can see I'm still keeping my same Elliott wave count here. The alternate count that I'm entertaining up here is that this is still a minute wave 1 down, but that this is a possible A, B, C, and that this is then completing wave 2 here. Okay, so that's another alternate count that I've got in here. But right now, this hasn't changed from the fact that this peak, if this is still a peak, it looks like it, is lower than here. And this low is lower than in here. So we are still in a short-term, trend down. Granted, the move over the last few days has been pretty sharp, in terms of a kind of a reflex rally is what it looks like. Now we'll see. S&P 500, this is the most compressed since the same thing. All right, since June 23rd, short-term top and the doji bar up here. Okay, so what does that mean? That means pause, like I've talked about before, pause or indecision. Okay, so here we are getting that on a compression day at a potential top, and we'll talk about the VIX here in a moment too. And that's kind of making me just one more piece factor that's making me wonder about whether we're at a short-term top now. Look at the Nasdaq. Okay, the Nasdaq's at another all-time high, closed on a daily basis and on a weekly basis. I saw this, it's interesting, I saw this in a financials XLF ETF, and I posted that as a separate video post. I won't be reviewing those today. Check that out. It was out, posted it yesterday. Same type picture. So I am wondering, we're getting some wild swings in here. And I'm wondering whether or not that's what's going on as a broadening type volatile action. That's what's happening. If that's the case, then I would be watching for this to reverse back down. We're at the top of the Keltner channel. And what's the ADX? ADX is 21. So it could be the start of a small trend. And we'll see whether this plays out or not. If this is truly here at the top, then I expect it to start to pull back down just like that. All right, the next one is the New York Composite. Now, the New York Composite, I've got this potential large head and shoulders pattern in here. And look at the New York Composite on Thursday. Okay, this is extremely compressed. All right, and 21 points, the smallest range of the trading range for a day of the year. And as a matter of fact, it is the smallest trading range since almost exactly a year ago on July 14th. And if you go back to last July and you go back to here and you see this little blurpy little day right there, just like the one I just pointed out that we had on Thursday, it's right before we then kind of roll over, then we get a rally, and then we roll over strong into September, October. So don't know, just because we get 1 day's worth of action doesn't mean this kind of thing's happening. But it's you don't really see this kind of compression usually at the bottoms. Okay, so you see it at short-term tops and intermediate tops. So that's what I'm watching for. And of course, I always, I had this identified as a potential shoulder up here. Whether it's going to make it to this height or not, we'll see. And we'll see whether it plays out. But it's, at least it's worth looking for. Russell 2000, this looks like an upward channel here. It looks like we started to break out of it and then we pulled back up. So honestly, I don't know what's going on with the Russell 2000. I don't have a good picture in mind. The weekly chart, we'll talk about that in a minute. That's a little bit different picture. Let's look at the Dow on a weekly basis. Huge snapback week for all the indices this week, okay? Up 326 points. But that's what it looks like to me, and we'll see whether that plays out. Now, we have the 10, whether there's follow-through. When I say play out, it means, does that mean that we're going to get follow-through because we had this kind of a snapback, or is this just a reflex rally? Now, the interesting thing here is that the 10-week is below the 21-week, and it's been that way for 3 weeks now, 3 bars. Now, we had it here, and then we pulled back. But you just don't get that very often, and it's a possible, we got it back down in here. So it's the potential is here that something could be turning, or we're just pushing sideways. So make a note of that. S&P 500 weekly, same type thing. And one of these, one point I want to make out here, this is all-time. We're buried just fractionally. This closing week is an all-time weekly high close for the S&P 500. So that's kind of interesting. Look at the Nasdaq on a weekly basis. Now here's the 5132.52.52. That was the intra-week high in 2000, March of 2000. Okay, and notice how that was kind of resistance and resistance in here, and now we close above that. So again, we'll see whether or not the volume for the week on that close is not super high. It's not even at a 50-week moving average for the volume, and we'll find out whether that means anything or not. But the trend is still up on the Nasdaq. You can't argue with that. I mean, it is what it is. And then the New York Composite Weekly. This is rather interesting to me. And the thing that I'm wondering about here, same type of thing with the 10-week pulling down below in terms of the moving average, 10-week below the 21-week, and getting these closes. This is a weaker scenario than some of the other indices. And it also, remember on the daily chart, I talked about a potential head and shoulders. Okay, so look at this picture, and then let's go look at the picture in 2011. Okay, it looks somewhat similar. And the fact that you get in that 10-week breaking down below, you get this snapback rally that occurred here on July 1st, and then it came over and it rolled back over. Now, granted, there was a whole lot of turmoil going on with the U.S. government and everything at the time, and that was the background. But there was a topping that started happening all the way back from February in 2011. And so what's happening here? Where did it start to top out with us? February 2015. So I'm on alert for this type of action and watching this real close. The next one is the Russell 2000 weekly, and then we'll be done with the indices. There we go. And this one I've shown many times for weeks and weeks and weeks now. We've got this long-term trend line from the March 2009 bottom. We're on the underside of this trend line. It looks to me like we've had 4th intermediate waves and that we're working some kind of 5th intermediate wave. I think there's the possibility it's already completed up in here, but the wave count isn't totally clear to me. We may have one more little push going on. We'll see. All right, that's the indices. Let's look at our indicators. Okay, the trend or short-term trading index on Thursday, it closed at 1.21, Friday 1.37. So you can see, yes, it went higher as the market was selling off, but the 10-day, which is what I'm watching, the blue line, 1.20, we're right smack back in the middle of our zone here, so not a whole lot new on that. Let's take a look at the VIX. See if I can find it very quickly. Here we go. All right, now the interesting thing about the VIX is look how low this is, okay? This is really low. I mean, talk about a dramatic movement going from really high up to down to really low. And the intraday got all the way down to this low back in December, literally the lowest of the year. in terms of intraday reading on the VIX. So you got to sit back and say, okay, is the market moving dramatically higher in here? I mean, is this, you know, when it gets down this low, you've got the potential for a top. And this is what we got. We got tops back here on, what was this, June 23rd. And in similar type scenarios. And okay, and you can look back and say, well, yeah, you've had some times where you traded a little bit more below where the current is at 11.95. So let's say it's right back in here. Yeah, we had a bunch of that. But that was right before we went into major corrective action of wave down, back up, a huge wave down, September, October. That was June, July. And again, that was back at that time when I talked about that July 14th short-term, you know, most compressed day on the New York composite, NYSE composite. So it's kind of interesting when you start to get a confluence of things lining up. Then I sit back and say, okay, something might be in the works here. And again, you know, I view my job, what I'm constantly trying to do is I'm looking for, you know, reading the tea leaves of the market, what's going on, what's trying to do, you know, and so that's really what, we're not in the predicting business. I mean, nobody knows for sure what the market's going to do. All we could try to do is read these different indicators, see what's happening, watch price, and just go from there. So the next one we want to take a look at is the high-low. Hopefully I can find that fairly quickly. There we go. It knows right where I want to go. I don't know how it does that. Okay, so here's the 52-week new high, new lows, and we've pulled back down now. Again, there were 122 more new lows than new highs on Friday. Now, granted, we were, you know, it was a down day. It was kind of mixed, actually. It was, I think, up 1 on the S&P and down 33 on the Dow. But again, it looks like we're starting to pull back down. McClellan oscillator is the next one we want to take a look at. Let me go back to the New York composite for that. And so the McClellan oscillator is up here near this oversold, and then we pulled back down on Friday. So I hate to read too much into this little M top up here. And I know I've talked about this before. M tops and W bottoms, and you see it on indicators, you see it on price. It's just something to be aware of. It doesn't necessarily mean we're at a top, but you know, I'm watching this just because we're up near the high end of the zone, okay, on the McClellan oscillator. All right, put to call ratio. Let me see. I know I had that. Okay, the 10-day put to call, equity put to call is 0.68 right now. So again, we're not at an extreme, but that's the reading as of yesterday's close. Okay, the next one we're going to take a look at here is the high yield bond fund, HYG. So it's kind of pushed sideways for most of the week, actually. Here was the 10th, last Friday. And so look, Monday, Tuesday, Wednesday, Thursday, and then we get this down close, sweeping down close on Friday. And it's a close back below the 10-day exponential moving average. So right now, I am suspicious that this is about to resume its downtrend. And if that's the case, that's an indication of what might be getting ready to go on with the stock market. And the next one we'll take a look at is TLT, the long-term bonds. Here we go. So they pushed up over the last 3 days and back up to the 55-day moving average. We're still in somewhat of a downtrend here. It's been chopping sideways literally since kind of mid-June. And we're, you know, literally, I mean, when you look at this, June 16th, it was 119.07, and here we are on July 17th, 118.72. So we've really hardly gone anywhere over the last month in terms of with the long-term bonds. And the US dollar. US dollar is doing exactly what I expected it to do. Okay, I'm expecting it to move higher on a third minor wave, and it's doing that now. It took a little while to get a little momentum going, but right now it's acting like it's trying to cooperate. We've got the 10 above the 21 just moving above the 55 right now, and it's pushing higher. I'm expecting my short-term, my initial target is up here above 101 to 101.5. We'll see if we get there and how fast we get there, and we'll kind of watch the wave count and go from there. Let me look at something here real quick. And let me pull back down to here. Yeah, that's why I was expecting. If this turns into a normal wave 3, this is going to be up around 101 in terms of the initial move for wave 3. We could get a wave 5 push higher, so we'll see how far we get on wave 3. And because the dollar is moving higher, it's having an impact, I believe, on oil. Of course, there's a whole bunch of other stuff having an impact on oil because Iran, the agreement with Iran, potentially Iran, releasing a lot more oil out into the marketplace. But oil has taken out this low on a short-term basis, 16.95. And we went to a low of 1678. And the reason I'm calling attention to that is because everybody's looking at this as a potential reversal type bar. And when you get a bullish reversal type bar that then doesn't hold and it fails, then that's kind of an indication that the market is really a little weaker than everybody expects. So right now, this looks like it wants to continue down, and we'll see if that's what we get. And the trend is still down. Gold, I made a note of this. I talked about this on StockTwits yesterday, I believe it was. Yesterday, yeah, it was yesterday because it was breaking down. And actually, it may have been, I don't know, it was sometime in the last couple of days. Let's just put it that way. But this breakdown is continuing down. We have broken down to 2010 lows. Take a look at this. And of course that doesn't help you a whole lot, but you can see we're at 108.65, and you got to go all the way back over here into early 2010 to get to 108.65. But we're in this potential support mess, and we'll see. But the trend is being reinforced to the downside, so this is starting to roll over and starting to play out this wave count that I've got now. So I think we're in minute wave 3 down of minor wave 3, and this should start to accelerate if that's the case. All right, let's take a look at some of our sector ETFs. Take a look at semiconductors. Semiconductors continue the short-term downtrend. Not a whole lot to say. We got this big bounce off of this support down in here, and we came right back up to the 10, and looks like we're stalling out a little bit here. We're down below, still down below the 233-day moving average. And the next one is the home builders. Let's see what's going on with the home builders. There we go. There's the home builders. The home builders, pretty good little down move on Friday, closing below the trading ranges of the previous 4 days. So, pretty much a low close for the week, but we're still kind of in the middle of this little move here. We're right in the middle of it. And we still have, the 10s almost laying right on top of 21. So, the short-term trend, intermediate trend, long-term trend is still up. This hasn't totally broken down yet. So we'll continue to watch that. I do want to mention the XLF. I talked about it, had a separate video on it yesterday, so that is out there. I'm not going to go ahead and spend time looking at that right now. Biotech is what we're going to look at next. IBB. And boy, this just continues to push. It just continues its trend upwards. Push new high, pulls back, push new high. Let's take a look at some of our indicators. And we're not seeing any divergence. A little bit of divergence on RSI showing up here. And what is the ADX? I'm looking in my little data window. ADX is 18, so that's not an indication of strong trend to me. So the fact that we're at the Keltner channels, we got an ADX of 18. Be watching this pretty closely for something like this, because what was the ADX here? 15. Okay, so you get 15, you get 16, and you roll back down, you pull back down to the middle of the Keltner channels, and I wouldn't be surprised to see that same exact thing happen with IBB right here. And then the last ETF we're going to take a look at is XLE, which is the energy select sector, and of course that's going to continue doing exactly what oil is doing, which is pushing down. And look at the close here today. The lowest close, that is the lowest close of the year. on XLE, and actually maybe the lowest close in a long time, 72.44. Yeah, you got to go back into 2013, it looks like, to get back that same range. So the downtrend continues, and I know I talked about this when I said we had this potential range that we're looking at here. We close below this, we could swing this distance down. We'll see, just have to watch. I mean, we've had a pretty steady move already, a little bit of a pullback here, but that's not super strong. So we'll have to watch and see what develops. I don't, the trading range here I've drawn is not, it's not crystal clear in terms of, the precision of the moves that it's doing, but you can't argue with the fact that the trend on a short-term, intermediate, and long-term basis is still heading down. All right, now let's take a look at our 5 stocks we're going to look at. We're going to start off with Micron Technology. Okay, MU. All right, the big news of the week was on Monday. It was reported, I can't remember where this source came from. It was one of the newspapers, I believe, and it may have been the Wall Street Journal. I'm not sure. But, okay, a Chinese company making a bid for Micron Tech. Supposedly, the news on Monday was, they've submitted a bid. Well, then MU says, no, we haven't received a bid. And so then it was revised, story was revised to say, well, they're preparing a bid. Oh, wow, somebody really leaked something and somebody really blew something. And so the real question then is this even a legitimate rumor, a legitimate story? And if it is, does it even have a chance to fly given that it's a Chinese company taking over a semiconductor company here in the United States? I don't know. We'll see. But right now, we've got to pop back up above the 10 on these last 4 trading days. I mean, we've had a pretty big sell-off in this. We got this big gap that's sitting right here. So it wouldn't take much for this gap to close. And that's the top of that gap is 23.65. So that's a possibility. Let's take a look at the indicators. We are getting some divergence that showed up on this move right down to here. So here we get this pop. Now we're back up to the middle of the RSI range, up to 50 to the 50, pulling back up to the 50. When I see this looks like, like maybe the selling pressure may be over with here, although the DI plus is not above DI minus, and the demand index is still negative. Okay, so again, we had the short-term little bit of divergence in here, but I don't know. I mean, it's in a pretty sharp downtrend. We could have something going on, in here. We can do, definitely, who knows what's going on with the news kind of thing. Let me look at the volume on this. So the big spike day on Monday, then everything got kind of quiet the rest of the week. Really about the 50-day moving average, though, the volume. So it's not too bad. I mean, it's a decent amount of volume that's in here. So we'll see. No particular reading that I'm taking on this because of the fact that the moving average is pretty sharp down, and we could see, like I said before, this thing filling fairly quickly. But that's not anything I'm interested in playing right now. NXP Semiconductors. Here we go. NXP is in a short-term and intermediate trend down. It's kind of rolled over a little bit and pulled back down here. If you look at the bottom of this gap, right about in here, about 86, hasn't quite closed that yet. So I'd say that's a potential short-term target for this to keep pushing down till it gets there. And about that time, 233 might move right up there to where it could get some support. Now, let's look at this trend lines going on. Got this long-term trend line. It's possible that that long-term trend line could come into play too, and that we get support coming to there. But first things first. First target's going to be 86 to me, of it filling the gap. The next one is SanDisk, and boy, SanDisk is that was a frustrating stock earlier. With this mess that I got caught up in trying to do a couple trade ideas, and then it breaks down and does really nice move down in here in terms of the trend to the downside. Pretty steep, pretty good, pretty solid trend, but it's been going on for a while. Wouldn't be surprised. Again, this is in sympathy with MU, this type of action. The semiconductors are bouncing together. We'll see what we've probably got some kind of bullish divergence going on in here. I'm not seeing it on RSI. A little bit on the demand index, and a little bit here on DI minus, but again, not super strong, and the trend is still down on all of these. Let's see, the next one is FireEye. And actually these security stocks have broken down a little bit. Actually, you could almost say it's a pullback, but this is a major trend line on FireEye. Okay, this trend line comes from December, so it's what, about an 8-month trend line, and we are right at it. And with Thursday's intraday, it came down. Now this one back here on July 7th kind of broke through it a little bit, but we came right to it on Thursday, and here we are trading below the 10. The 10's below the 21. This looks like it wants to roll over, and of course, if we break Thursday's low, get a close down below here, this thing could get some steam and get underway. We'll see. Let's see what the that RSI is not really showing. DI minus is above DI plus, so selling pressure is in place. Demand index is negative. And what was the RSI reading? The RSI reading is, okay, it's 40.62, so it's below 50. So this looks like it wants to roll down. We'll have to keep watching the price action and see. Right now, that's what it's doing. And the last one we'll take a look at is CyberArk today. And CyberArk is very similar to FireEye. And notice this trend line. If you take, this is the first day of trading on CyberArk. Okay, you take that low and the low back here on February 2nd, and you draw your trend line, and then right here on July 7th, you get another touch point exactly to it. So you got a pretty solid little trend line here. We'll see whether this is going to hold or not. And again, let's see the bottom of a gap that hasn't quite been filled. It got real close back in here. The top here, so say 46. We'll see whether or not we can get down there. If it breaks this trend line, it'll probably do that for sure. We'll see. Now, I notice how support came in here, which is right close to the top, right in here. So that's in the 46 to 47 price range down in here if this thing breaks. All right, so that's the picture on CyberArk, FireEye, and the semiconductors today. All right, this has been Joe for Beyond the Chart. Everyone have a great rest of the weekend. And if you're watching the video anywhere besides my website, head on over there. Check out the posts and the other things I've got for you. If you're not a subscriber, subscribe gives you access to the Trade Ideas page and the free PDF I've got for you. So until next time, stay focused, follow your plan, trade without fear. Have a great weekend, everyone.